Hey traders, Nick here looking at Salesforce. CRM is the ticker. Now this is a wild one. It runs fast, and let's see here. This is a daily 1 year worth of action. So even up here down, what is that? Eyeball 20%. It's still up eyeball 23% for the year. So back to better reality numbers. And we did say there was a head and shoulders, and if they lost the neck, they would fall to this one. They didn't fall to that one quite, but they came close at 128. And the point of this video is that 128 number. So nice bounce, but revisiting it causes me to think twice about it. So what is the problem with that? So this is a momentum stock, and a highly valued momentum stock. And let me tell you, it's probably, I'm going to guess 110, 120 price to earnings. 102. Okay. So still 100 PE. So this is Amazon nosebleed territory. And it's the king of the cloud, so to speak, because they were the original all cloud-based business where if you wanted to manage your customer relationship, that's what CRM stands for, management software, then you can use them and not have to be tied to a database that lives on somebody's computer. So they can work basically and stay in touch with the salespeople, the companies, stay in touch with the clients, virtually always updated, always available to everybody at the same time. So technically speaking, so fundamentally, the concept is great. They're a fast-growing company, if not the fastest in since whatever. Their CEO is like the perfect CEO. He will never cause the stock to fall, unlike CFOs sometimes do. So it is a momentum stock, and it moves fast in both directions. And the point of this video is that there is caution to be told here. So falling back to a neckline is okay if you hold it. It's not okay if you lose it. Now, if I look left, this has been a battlefield before. So if I were to, I was looking at a different stock. Okay, so if I were to look at what happened here before, okay, so for a while, this was an all-time high level resistance, and then boom, came the breakout, and we went to the moon, and we came back and defended it several times, and here we are falling back into that same exact neckline. I mean, this is like almost perfect. Okay? Yes, success, still support. So what was resistance has become support. Here, support. Support. So the question is, now? Again? Okay, so if it is support, then it bounces. Not an obvious entry point, by the way, for me, especially if I'm long other stuff. Why? So let's consider the fact that it doesn't hold, okay? So if this support level fails, so this could happen. I'm not calling for this, but I have to be aware of it. So if this level fails, then it could fall to here and lower, but not in a straight shot. So it'll fall tick, tick, tick. So if I wanted to be a stickler about it, I'd probably do something like this. And again, I'm not calling for it, but I have to be aware that this exists. The threat exists. And why do I pick this level here? Because it's probably where they'll fight over it again. Just like this was a breakout point, this was a breakout point earlier. Okay, so if this fails, this may come. Okay, so I'm not calling for it. It's not a trade idea to where I need to buy puts to short the stock, because if the markets bounce, this guy will be at 144 in a blink of an eye. But if they don't, if the markets fall, this one could be at 116, 118, 120, 122 quickly. So $10 can go like that. Again, I'm not calling for it, but the risk is there. So what are the things I look for? So if I wanted to trigger an alert to start shorting it, I'd put an alert at the lows of today, 128.80, 120, let's call it 129 to start looking, and probably a let's get on board below 127.80. So if it goes to here, that's new territory. See, there's nothing below that. So there could be thin air below. 126 is the last one. So maybe I'll put a third one next to 126 to get me in. Again, below that is 121. So there's thin air. But first, I need to see a failure of today's candle. Today is the 13th, 11/13. That was a nice shrug and closed up. So nice retest of the low. Emphatic move. I need to see continuation. If the markets fall 2-3%, I don't think this holds. So again, not a tradable idea until the level fails. And if I'm long it, I need to know that it's there in order to protect myself with cheap puts. Okay, Nick signing out. If you have any questions, okay, let's talk about the upside though. The upside, first obvious level to look at is today's high, 133, almost 134, 133.9. Second level I expect to be a lot of resistance is around 136. Why? Because that has been the neckline. So just like on the way down, it provides support. On the way up, it will show resistance. Okay, so this I expect it to be resistance on the way up. Why? Because whoever fought over it here, whoever fought over it here, whoever fought over it here, and here are likely to fight over it here on the way up. So it'll be congestion. Unless we have one of those days where we go, I doubt it. But anyway, so this could be resistance, this could be resistance, 140, 141 could be resistance. Obviously above here, I need to see them. And then, if they can retake this, then we'll talk about higher prices. But on the way down, trigger 1, trigger 2, there was another one here. On the way up, look for some resistance here. All right, Nick signing out. If you have any questions, let me know. sellspreads@gmail.com, or you can message me wherever you do.